Welcome to the SIP, the Solstice Innovations podcast. In each episode, we chat with industry experts and innovators in insurance and insurtech. Join us for insights on trends, technologies, and the stories driving our industry forward. Let's sip on knowledge together at the SIP. Hi, I'm John Umstead with Solstice Innovations. In this episode of the SIP, our guest is Rick Pedack, Chairman at Mountain Pacific Bank. All right, so Rick, let's go ahead and just jump into things. And why don't you give yourself a quick introduction and where you work and what your role is?
Well, good morning. I'm Rick Pedack. I'm chairman of Mountain Pacific Bank in Everett, Washington. We're a $860 million bank doing community banking, commercial banking, and I'm also head of the bank's captive insurance agency, Mountain Pacific Insurance Services. And that takes advantage of the specialty lines of business that I've historically done professionally. So here I am today. Good to talk to John.
Good to talk to you as well. And so, Rick, you've been involved with both banking and other products, and specifically where I'm going with this is NFIP as well as private flood through setting up a Lloyd's flood facility. What led you to kind of bring those industries together?
Well, I think a few of those things. Obviously, I was at a flood conference in Seattle a number of years ago for the National Flood Conference, and they had a Q&A session, and they said, well, what do you care about whether or not it's in the right flood zone or in the right property, and kind of as a banking type question. And the panelist said, well, your job as the banker is to assure compliance with the regulations. And so that really hit me as like, okay, banks, non-financial institutions like mortgage banking companies, credit unions, and all those folks, our job was to do the enforcement of the Flood Insurance Act and making sure people have flood insurance. And as a vendor working with banks, providing insurance products and services, I'm using banks generically. Our job is to help those financial institutions comply with the law because they can't always do that themselves. So it was just kind of a natural extension. Banking and insurance go together. They don't always go together, but they have to rely upon one another. And so one of the pluses having the experience in that space, doing being a write your own administrator, also a Lloyd's underwriter, is you have experience working with lots of folks throughout the United States. My clients at one time, Bank of America, among others, but also the community banks in Arkansas, Kentucky, Florida, Texas. And so part of this, bringing those two things together professionally, it's still fun. And you can work in that small financial institution space many times because they don't always have access to the expertise in terms of compliance and those types of things. And that helps them in a big way, whether it's through trade associations, but also as their vendors. Now I'm going to turn my hat around and say I'm going to put my banker hat on. And we don't have a huge legal department. We have none. So from that perspective, we have to rely on our vendors and the trade associations like the ICBA, Independent Community Bankers Association, similarly for credit unions as well. You have to rely on those folks to make sure that you are getting the right guidance and information to comply. Some recent things came up just the other day. In the state of Connecticut, there was a flood insurance legislation passed. And it came to me from a broker saying, hey, Rick, what do we do about this? And we looked at it, we checked with different folks, and it was a front-end compliance at loan origination, but there was no loan servicing requirements that anybody had to do. But it's these types of things that happen throughout the United States, not just at the federal level, but also the state level. So that's what we do.
It's interesting because there really aren't. I mean, you may know of others that are positioned like you are, but I don't know of any others. Do you run across anyone else?
Well, not really. I mean, there are a number of folks in the lender-placed insurance space, and then there are operations that are also doing private flood insurance because
Mhm.
those two go together. But I think if you historically look back, the early Lloyd's programs really were conducive to automation in terms of product structure. If you looked at what the federal government did with the MPPP, Mortgage Protection Plan product, it was designed by committee, designed by the government, not conducive to automation and convenience, and the product was a failure, quite candidly.
Mhm.
And so this created the opportunity. If they would have adopted the type of product that's in the private market, they there might not have been a private market ever developed at the end of the day.
Yeah.
Uh, so there you go. I think that's interesting. But part of the other thing that we are doing is we're doing flood coverage for alternative energy projects throughout the United States because solar panels with batteries and those types of things are being constructed, as well as uh, a thing called a mini grid. Okay, for example, in Texas, if you fall off the grid because you're in out middle of nowhere in West Texas, you still want to be able to run the cash registers and keep the beer cold at a convenience store or a hospital. And so these mini grids come online when power systems fail. Well, these are financed by banks, which then means they have to comply with the flood insurance requirements, which means there's flood insurance. So it's really a unique space that we're supporting in construction of new projects. So it's kind of an exciting business space, if you
Yeah.
will.
Yeah, it is. It's very interesting. And you just mentioned compliance now, but you also did right at the top of the podcast and throw a question at you. Maybe it's fair, maybe it's not. But for the I guess sort of the pessimists that are out there in the industry, they would say, there are compliance, flood insurance is required for certain properties that have federally backed loans, and that all, everyone says they're compliant, but they're not. And then you have the others that are much more positive and say, no, the compliance rules are out there and everybody's pretty much compliant. So where do you think the truth lies between those two extremes?
Well, it's funny. I did a presentation at the National Flood Insurance Conference called "Everything I Learned About Flood Insurance I Learned Through the Cinema." And I quoted a line. I had great pictures and that, and I quoted a line out of Casablanca: "Round up the usual suspects." So I think that compliance element is kind of go trust but verify, as President Reagan once said, is that okay? Well, I'm going to check with my vendor. Is there other folks that I can check with, particularly in loan servicing spaces of any financial institution? A lot of folks have networks of people they can validate and check. But I think if you look at the FDIC website, uh, every month there is a bank that is getting cited and being assessed civil money penalties for failure to comply with the flood insurance requirements, blah, blah, blah. And then they get fined. Well, as a bank director myself, I don't want to sign a damn governmental acknowledgement that we failed to comply with the law and being assessed civil money penalties. So so it's a very serious matter because it goes all the way up to the board of directors. And if you're an attorney or whatever reason you're on a bank board, you're not particularly interested. You're relying on the bank staff to comply with the law. And in turn, the staff has to rely on their own expertise or staffing or access to resources from a compliance perspective. So it's taken very seriously. And unfortunately, I think maybe this is more common if is in community banks, commercial banking space. A commercial loan by definition is a custom credit. Okay. You're going to loan money as a bank for a farm. Okay, and I think this is a great example. Is okay, there's the farmhouse where the farmer lives. That's probably on the high ground. Then there's the barn, and then there's the outbuildings and so forth and different. Well, every single one of those buildings could be have a different flood zone qualification, and you have to have flood coverage. Well, each building, being able to track and monitor the flood insurance and all those
Hmm.
gets tricky. Also, flood insurance compliance and SBA lending. That's also a tricky space where uh, the business contents of that, let's say, convenience store we talked about in Texas, well, they don't own the building, but the stuff in the building is what the borrower borrowed money on. It's in a flood zone. Okay, we need flood insurance on the contents, on the beer and potato chips. And so this is, I think, where bank staff and management can get caught up in that because you are dealing with custom credit. Now, contrast that with Bank of America servicing, millions of loans. Residential loan one is the same as residential loan 2 million because they can automate the process more readily in terms of dealing with compliance and because you're not is that in the zone or is that building or what have you. So I think this is where we can help folks in those types of circumstances because it's important because it is a serious driver from for bank executives and bank boards even.
Yeah, real consequences for not being compliant.
Yeah, exactly.
So you've got experience with both NFIP and private flood, and a
Hmm.
lot of times those are seen as competing. A lot of times they're not. So,
Yeah.
what are your thoughts on it? Do you see them as competing? Do you see them as complementary? If complementary, how can they be more so?
Well, they're complementary, but they're also competitors. I guess you could say
Things
they're
can be true, right?
frenemies in a lot of fashions.
Yeah.
Uh, one of my experiences that we hadn't talked about is we had my organization had done business in Canada, and so I think we can contrast the American insurance market to the Canadian market in that if you buy a homeowner's policy and you live in um, Manitoba, let's say, or Ontario, you have flood insurance as one of the perils of your homeowner's policy, or I think earthquake as well. But we're not going to get into earthquake. But you kind of go, okay, well, it's all bundled. There is no national flood insurance program there. So as we look at the U.S. market, I think the NFIP was a wonderful invention back in the 60s because the underpinnings of our economy are all of the coastal states. You're in New Orleans. There's a port. When my parents came to America in 1950, they came into the port of New Orleans, New York, or those types of things. And so ports and coastal areas are tremendous economic drivers for the United States and for any economy. So therefore, I think the creation of the program was great. Now, time has evolved. Since I was a little boy, the flood insurance program has evolved. Now we're into flood 2.0, but those two things can complement one another. But before the creation of 2.0, I really believe that the private flood market was able to cannibalize the NFIP for risks that were less risky. That are, if you're not out in Key West, Florida, out on those pontoon homes, okay, well we'll write the better stuff, and could undercut the pricing to some extent because of the price flexibility of the NFIP, or excuse me, let's say Lloyd's markets. So I really think those two were kind of frenemies, if you will. But the benefit to the public is a private market has the ability to have higher limits. Let's say we talk about individual homeowners. 250,000 doesn't maybe get you very much if you live in certain parts of Florida or other parts of the United States. And we've seen the real benefit of that writing excess flood insurance over the top, which we've done, which we do. And then at the same time, looking at commercial property. I mean, $500,000 doesn't get you very far. So those are kind of circumstances where the NFIP will always be the market of last resort if the private market can't respond because it is good business and it does provide benefit to the public.
Yeah, I think from my own personal opinion, they're complementary, um, uh, because my own beliefs is that the private market is just isn't going to have either the capital or the appetite for everything, and so the
Exactly.
NFIP has to be there as well. And that's not always a popular opinion. Depends on what crowd you're talking to, right?
Well, I suppose that's true, but we had a circumstance where we wrote some risks recently in the private market because uh, essentially lender placed on an island, and but they had to have flood insurance because of the bank having the obligation to provide it. And uh, did it flood there? No, it doesn't flood there. So therefore, therefore, it was a good risk. But otherwise, it was cost prohibitive for this business to be able to get flood insurance to comply. So I think there's a lot of elements. There's not just any one answer, but those two things go together no matter what. And
Hmm.
if directionally adding flood insurance to some types of homeowners policies makes sense, directionally that can be the case. In the case of commercial insurance, and many times flood is an included peril just because of the nature of the underwriting that occurs. So,
Yeah, yeah. Well, Rick, we're beginning to come toward the end of our time for the podcast. But I want to before we wrap things up, want to ask if there's anything that we've not covered that you would like to talk about before we say goodbye.
oh, shoot, we could talk for hours, but I
Hours, yeah.
think, but I think we're going through some interesting transitions in the insurance industry in general and how that affects financial institutions, whether it's a mortgage company, a bank, a credit union, and uh, being able to protect for that type of exposure for flood insurance is important for the economy. We've all seen the disasters that have occurred. Katrina and going back to Andrew, Iniki in Hawaii, and the National Flood Insurance Program and private flood insurance is a key part of managing risk for everyone.
Yeah, absolutely. How about just your company, your bank, your private flood products? Any plugs you'd like to make, or any particular innovations you'd like to mention? You mentioned the insuring alternative energy. Anything
Mhm.
else you got going on you can talk about?
Well, we'd love to have your deposits. So, John, our friendly staff will be able to help you. But I think the important part of, let's say, community banking in general is we talk about the utility of buying clothes. We can go to Walmart or we can go to Costco and get a pair of pants and a shirt and whatnot. Okay, we have clothes on. But if you go to a tailor, let's say maybe it's a Nordstrom, here in the Pacific Northwest, well, I'm going to get a jacket, and they're going to measure it. Does it fit right? And then the seamstress or seamster will adjust the garment, hem it in a little bit here and all that, so you get a good fit. Commercial banking, and particularly community banking that we do, is we're able to customize the credit. Is like, okay, the Wells Fargo's is and the Bank of America's and the large banks a little bit more commoditized, like a Walmart. You can get a loan, but maybe it doesn't fit perfectly. Whereas we can look at different factors of the collateral and how do we adjust the payments, how do we customize the credit, and we've had a tremendous amount of success in picking up business and working with financial or borrowers that need credit that they weren't going to fit within the box and the model. We get all kinds of referrals from that. So it's all about service, and so from that perspective, you can get it from us, but it's going to be a little bit different. We will know you as our customer as opposed to just. But of course, we have all the other automated uh, services, apps and that type of stuff. But the other stuff, cool.
All right. Well, Rick, you've been an innovator, an entrepreneur, a founder, and in multiple industries. And so one of the things that we like to do with the podcast is kind of end on a little note of advice or wisdom that you might be able to share. So, what would you say to those that are looking to innovate either in banking or insurance? What
I that's a good question. we, but I think I always hate that's a good question. But I think the thing is listen for people's ideas. Even an idiot will have one good idea, because so don't dismiss the source and listen and say, is that well? And so I've been able to adopt things where somebody had just one good idea, and that's all it takes, and it makes a difference. Like, yeah, maybe we should do that. A lot of times, so that's our role as entrepreneurs and managers and executives and business owners, is listen to what people have to say. You might find a winner in there somewhere.
There you go. Great advice. I always tell my kids there's ideas flying around us all the time. We just have to have our eyes and ears open and grab them.
Absolutely.
All right, Rick. Well, hey, thanks very much for taking time to sit down with me and being on our podcast. Appreciate it very much.
It was a pleasure. Look forward to doing it again.
All right, we'll do so.